This is the Friday, January 3rd, 2014 version of the Market Plus segment. Joining us now is Elaine Kub. Elaine, welcome back.
Thanks.
One of the topics we didn't have a chance to discuss during the full show was cotton. A little bit of a rally this week, bit of a sell-off, or last week, bit of a sell-off this week. Where's the cotton market headed?
Well, that sell-off this week that you mentioned is fairly consistent with the general commodity pattern this week, similar to crude oil. Something about coming into the new year and traders, wanted to lay off risk. And I think there is significant risk in the cotton market right now. That uptrend that it has been on was maybe tied to the tightness of the U.S. supply and demand, but globally, and we're going to get another look at this in the January crop report that's coming up too. Globally, there is large stockpiles of cotton in China, in particular, that at any point in time they could wake up one morning and release these stockpiles and really drive prices down. So that's the kind of market where you would not want to face that risk, or you might be looking ahead even as a speculation and thinking that it might make sense to get short in cotton.
Now, we were talking a couple of weeks ago about China's large stockpile, and at that point there were concerns about the quality of the cotton that China had been stockpiling. Is that still an issue? Is the market still concerned about what it is that China is holding?
It may be in the merchandisers of cotton. They may have been, getting their hands on, or certainly contracting down the higher quality cotton in the U.S. And again, that may have been what drove this recent short-term higher trend. But at some point, I think that you still have the threat of China releasing those stockpiles and shocking the market.
Now, what happens when should China release those stockpiles? Where could cotton prices go?
Well, I think they would certainly drop below 80 cents again fairly quickly. I don't know exactly where they would find support again. It may not be, a long-term trend that keeps going down and down. And I don't know that we'd go retest the previous lows from a couple of months ago.
Okay, but potential sub 80 and into the 70s.
Yes.
All righty. Well, now anything there specifically that would be sort of your trade of the week then, as we look at cotton? Yes,
I think so. And like I said, even as a speculation, I think it would make sense. I mean, I don't know that there are much reasons to expect it to go back above 85 cents. I don't know that anyone really expected it to get this far to begin with. So for it to be short in cotton and see it take a dive back down below 80, that would be a nice little payoff.
Yes, it would, for those that are short cotton. You bet. Now, we've got a question from John in Columbia, Missouri, and we're going to have you gaze into your crystal ball here. Look out to 2014, and John is curious, can any ag product rally this year, and what will it take? We're seeing one going on with the fat cattle trade. What else out there looks promising?
Well, to answer his first question, can any ag commodity? Yes, of course they can. Anything can happen. And yet, like I said earlier in the show, that was the sort of thing that we were looking at in soybeans even, when it was a little bit dry in Brazil and quite a bit dry in Argentina. You look for any sort of weather thing and you could easily, see something have a major rally. But that is not happening anymore in South America. I think that ship has sailed. Their pods are filling fine. They have plentiful moisture in the forecast, even the long-range forecast that will get them started in harvest. If anything, they may be a little uncomfortably wet during harvest. So for our major row crop ag commodities, I don't see anything in the near next few months that is going to trigger a rally. But we've still got the North American crop to get through. We have no idea what the spring and summer weather is going to be like. So within the year, to answer his question, of course they can. But that's what it would take, in my opinion, to be some sort of weather effect. Or to go back to the livestock or other commodities, some sort of really juiced up demand. Like I mentioned, crude oil was not able to go above $100 per barrel just because the economy is not growing that fast. It's not that optimistic. But if something did happen, that we really had a lot of optimism and a lot of growth in the U.S. economy or the global economy, that could certainly help the box beef market and the fat cattle market and the feeder cattle market and the hogs and all of the meats, sort of consumer demand could drive them. That's what it would take to drive them to even higher record highs.
All right. So there's a lot of potential out there in a new year, as there often is. And, you mentioned the row crops waiting on a weather event. March of 2012, April of 2012, we were all counting on huge planted acreage, huge corn crop.
14 million bushel crop, which we may finally get. Yes.
Right. And we'll find out on the 10th.
Yeah.
Now, Phil in Canada has a question. We're going to bring it back to wheat. We talked about that a little bit on the show. Phil is curious, is there hope for wheat looking out longer term, or are world feed grain supplies just too onerous for the next 2 years, barring a weather calamity?
I think there is hope for wheat in that eventually we will spur some demand. We'll have somebody step in here and change that trend. Trends change eventually. They cannot go on forever. Someone will come in and buy that wheat. But as far as any bullish news items that I can see coming down the pipeline, not really. So Australia is starting their harvest, getting pretty hot right now. So USDA is going to look in on that and again possibly change that bearishly. They upped the Australian production in the December report. They certainly may do so again in January based on favorable harvests there. So there's not, and like I mentioned, as I'm sure Phil knows, Canada has ample amounts of wheat. So there's really not a lot other than demand, other than export demand, buying, again, consumer demand, consumer change pattern, diets changing. That's what it would take to change that trend in wheat.
Right. So we're going to need to see the economies continue to improve around the world to get consumer demand up, and then probably prices stay low a little while to chew through the stockpile we've got.
I believe so.
All right. Now we've got a couple questions, guys, curious about corn. Bob in Nebraska is asking, and we touched on this on the show, but maybe you can go into a little bit more detail. Bob says, for those of us still holding on to 2013 corn, what do you feel about the chances we will see an increase in the corn cash price in the month of January when compared to cash harvest prices we could have received? Do current prices already reflect a worst-case January crop report?
No. I think that the chances for cash corn prices going up within January are fairly slim. This is just typically the time of year when farmers may be selling or the commercial mills and consumers are still working through the harvest stockpiles. So this is not the time of year where you would ever typically expect to see a rally in cash corn prices. And as far as a worst case scenario, I think that, yes, I think that the size of the harvest and the size of demand is pretty well priced in at this point. But a worst case scenario January crop report could be quite wild indeed, and we could easily see that average cash corn price in the country fall well below $4 or 20 cents below $40, let's say. That could happen on a really volatile crop report, worst case scenario. But I think that the market is pretty well priced in the anticipation of a 14 billion bushel number from the USDA. And hopefully nobody will be too surprised by that when
there's
this comes
bearish
around.
sentiments already in the price.
Yes,
but
yeah, maybe not
case.
worst case scenario.
Certainly,
yes, yeah.
certainly that would be a great buying opportunity if we
Yes,
already were pricing in a worst
absolutely,
case scenario.
Absolutely.
You bet. All right. Well, Elaine, we really thank you for being with us. Before we let you go, any final thoughts on the market here in this next week or this next month? Anything that really jumps out at you?
Well, I think that, I'm jittery like the stock investors that we would see, something really wild happen there. I feel like it was probably overwrought there at the end of 2013 going up to that record high, and everybody's waiting to see if there's going to be a major pullback, maybe even 20%. And I don't ordinarily do much analysis of stocks, but the concern is that an event like that would really scare investors and create volatility, waves of volatility through a lot of other investment markets, including our commodity markets.
And then we would see that in the farmyard.
Yes, sir.
All right. Well, thank you so much for being with us, Elaine. Appreciate you taking the time.
Thanks, Mike.
And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we'll continue to get expert analysis right to you. Thanks for watching, and have a great week.